You're not alone. Millions of HBAR holders are feeling the exact same frustration right now. The question is, what's the real story? What's really holding HBAR back? Welcome back. I get it. I've been there. You do your research, you make a smart investment, and then, you wait. Today, we're not going to talk about hopium or baseless predictions. We're going to dive deep into the uncomfortable truths, the factors that might be silently putting a lid on BAR's price, despite all the good Hedera Hashgraph news we keep hearing. This isn't about FUD, it's about understanding the landscape so you can make informed decisions. In the next 50 minutes, I'm going to reveal the 3 key forces that I believe are the biggest anchors on BAR's price right now. Understanding these isn't just about knowing what's happening, it's about empowering you with the knowledge to navigate this market intelligently. If you're interested in this topic, hit the like button, subscribe, and type "interested" in the comments. And I will give you a heart. But here's the million-dollar question that nobody seems to be asking. What if the very thing that makes Hedera so attractive to institutions is also the biggest obstacle to its immediate price explosion? We'll unravel that paradox in just a few minutes. Let's be honest. Many of us in crypto got into this space chasing those quick, explosive gains. The meme coins, the overnight sensations. And when you see a project with the strong fundamentals and real-world utility of Hedera, it's natural to expect the price to reflect that. Quickly. Think of it like planting a high-yield seed. You expect a bountiful harvest soon after. But sometimes, the soil needs more time, the weather needs to cooperate, and other factors can slow down the growth. Right now, for many HBAR holders, it feels like we planted that seed a while ago, and while we see healthy growth in the underlying technology and partnerships, the price hasn't quite caught up to our expectations. Hedera Hashgraph news is often filled with positive developments. Partnerships with giants like Nvidia, central bank pilots in Australia, enterprise adoption for real-world asset tokenization. Each piece of news feels like it should send the price soaring. But it doesn't always happen. This gap between positive news and price action can lead to frustration and a feeling that something is holding HBAR back. But here's where things get interesting. What if this very frustration, this collective feeling of "why isn't it pumping," is actually contributing to the problem itself? Could our own expectations be subtly influencing the market? Let's address the elephant in the room, the BAR ETF. The anticipation for a US spot BAR ETF has been building for months. We saw the success of the Bitcoin and Ethereum ETFs, and the logical next step for a project with Hedera's strong fundamentals seems to be an ETF approval. Think of an ETF like opening a floodgate of institutional money. It makes it easy for big players, pension funds, hedge funds, even your average Joe through their retirement accounts, to invest in HBAR without having to navigate the complexities of crypto exchanges and wallets. The Canary filing on the Nasdaq represented a huge step forward, a clear signal that this could become a reality. But then, delays. The SEC, in its infinite wisdom and cautious approach, decided to postpone the decision. This delay, while perhaps understandable from a regulatory perspective, can create uncertainty and dampen enthusiasm in the market. It's like waiting in line for a highly anticipated ride at an amusement park, only to be told it's temporarily closed. The excitement fades, and some people might just leave the line. For many HBAR holders, the ETF approval is seen as the key that will finally unlock significant price appreciation. The delays create a sense of being stuck in limbo, a feeling that this regulatory hurdle is the primary obstacle holding HBAR back. But here's where things get a little more nuanced. Is the ETF approval truly the magic bullet? What if there are other, more fundamental reasons why HBAR hasn't yet seen its parabolic moment? Now let's talk about something a little less exciting but incredibly important: BAR's tokenomics. This is the economic engine that drives the cryptocurrency, and understanding its mechanics is crucial to understanding potential price pressures. Imagine a company that keeps printing more and more shares of its stock. What happens to the price of each individual share? It tends to go down, or at least it makes significant price increases harder to achieve, because there's always more supply coming onto the market. HBAR has a large total supply, and a significant portion of these tokens are still being released into circulation over time. This gradual release, while designed to fund the network's growth and incentivize participation, can act as a persistent, albeit controlled, form of inflation. It means that for the price to go up significantly, the demand needs to outpace this ongoing supply entering the market. Furthermore, The initial distribution of HBAR tokens allocated a significant portion to early investors and the Hedera Governing Council. While this was necessary to bootstrap the network, it can sometimes lead to concerns about large holders potentially selling off their tokens, creating downward pressure on the price. It's a delicate balancing act. You need enough supply to fuel the network's operations, but too much, or poorly timed releases, can hinder price growth. For some HBAR holders, the tokenomics and ongoing supply release are a significant factor they believe is holding the price back from truly taking off. But here's a perspective shift you might not have considered. What if this carefully managed token release is actually a sign of long-term sustainability and a commitment to the network's health, rather than a price suppressor? Hedera is fundamentally built for enterprise adoption and real-world utility. Their focus isn't solely on being a speculative asset that pumps and dumps. They are building infrastructure for the future of the digital economy. Think of them as laying down the digital highways and building the bridges for businesses and institutions to operate more efficiently. This focus on utility is incredibly valuable in the long run. Real-world use cases drive sustainable demand for the network and its native token, HBAR. The partnerships with NVIDIA for AI, the central bank pilots, the adoption for supply chain tracking and tokenization, these are all tangible examples of Hedera's value proposition. However, the crypto market, particularly in bull cycles, can be heavily driven by speculation and narratives. Sometimes, projects with less real-world use but stronger hype and community-driven narratives can see explosive price gains in the short term. For some HBAR holders who are primarily focused on short to medium-term price appreciation, Hedera's deliberate, utility-focused approach might feel slow compared to the rapid pumps of more speculative assets. It's like watching a marathon runner steadily build endurance while sprinters take off in short bursts. The marathon runner is likely to win in the long run, but the sprinter gets the initial excitement. This difference in pace and focus could be perceived as another factor holding HBAR back from the immediate gains some investors desire. But here's a thought that might reframe your perspective. What if this focus on real-world utility is actually BAR's greatest strength, positioning it for long-term, sustainable growth that outlasts the fleeting hype cycles? Let's wade into a topic that often sparks debate in the Hedera community, the Governing Council. Hedera isn't a fully decentralized, permissionless blockchain in the same vein as Bitcoin or Ethereum. It's governed by a council of some of the world's largest and most influential organizations. While the council provides stability, enterprise connections, and a clear direction for the network, it also raises questions about decentralization. For some crypto purists, this level of corporate control goes against the core ethos of blockchain technology. There's a concern that the council's priorities might not always align with the interests of individual HBAR holders, and that decisions could be made that benefit the member organizations more than the token price. This can lead to a feeling that HBAR is somehow controlled or manipulated, and that this centralized structure is hindering its ability to gain the kind of grassroots, community-driven momentum that can sometimes fuel massive price pumps. It's a valid concern, and one that many HBAR holders grapple with. But here's a counterpoint to consider. What if this unique governance model is precisely what attracts major institutions and governments, providing the stability and trust they need to build on the network, ultimately leading to far greater and more sustainable demand for HBAR? Hedera has often been described as a silent builder. They've been consistently focused on developing their technology, forging partnerships, and driving real-world adoption, often without the loud marketing and hype that surrounds many other crypto projects. In the fast-paced world of crypto, where attention spans are short and viral narratives can explode overnight, Hedera's more measured and pragmatic approach might feel like it's lacking the spark needed to ignite a massive price rally. It's like the quiet, diligent student who consistently gets good grades but doesn't always get the loudest applause, compared to the flashier classmate who makes a big splash with one impressive presentation. For some HBAR holders, the lack of aggressive marketing and the focus on long-term fundamentals can feel like the project isn't generating enough buzz to attract new investors and drive up the price. They might see other projects with less impressive technology but more effective marketing campaigns achieving greater price momentum. But here's why this silent builder approach could be a massive long-term advantage. What if Hedera's focus on substance over hype is precisely what will allow it to weather market volatility and emerge as a true leader in the digital economy, attracting long-term, value-driven investors? The crypto landscape is constantly evolving, with new Layer 1 blockchains and competing technologies emerging all the time. Sometimes, market sentiment and investor focus can shift towards these newer, shinier objects, even if their underlying technology isn't necessarily superior. Think of it like the smartphone market. For a while, one brand might dominate the headlines and see massive adoption, but then a competitor comes along with a new feature or a different marketing angle, and suddenly everyone's talking about them. The same thing can happen in crypto. For HBAR holders, watching other Layer 1 protocols experience significant price pumps and increased market attention can be frustrating. It can lead to the feeling that HBAR is somehow being overlooked or left behind, and that the market's fickle focus is another factor holding its price back. But here's a crucial point to remember. What if Hedera's unique architecture and enterprise-focus position it to capture a completely different segment of the market than these other Layer 1s? One that is potentially far larger and more stable in the long run. Let's face it, sometimes the projects that get the most retail investor attention are the ones with the most exciting or easily understandable narratives. Meme coins thrive on virality. DeFi projects can promise high yields, albeit with high risk. NFTs tap into collectibles and digital art. Hedera, with its focus on enterprise solutions, verifiable compute, and complex tokenomics, might not always capture the immediate attention of the average retail investor in the same way. It can feel less sexy. This lack of widespread retail hype and FOMO, fear of missing out, could be another reason why the price hasn't seen the kind of parabolic moves associated with more retail-driven assets. But here's why focusing solely on retail hype can be a short-sighted approach. What if Hedera's strong fundamentals and institutional backing make it a safer and more reliable long-term investment than projects driven purely by fleeting retail sentiment? Remember that paradox we talked about at the beginning? What if the very thing that makes Hedera so attractive to institutions, its stability, its governance, its enterprise focus, is also what makes it less appealing to the short-term speculative mindset that can drive rapid price pumps? We've explored several factors that might be contributing to the feeling that BAR's price is being held back. Unfulfilled expectations, ETF delays, tokenomics, focus on utility over speculation, governance concerns, a silent builder approach, competition from other Layer 1s, and a lack of widespread retail hype. But here's the crucial point: these aren't necessarily permanent roadblocks. In fact, many of these factors are intertwined and could be on the verge of a significant shift. The political will for crypto adoption is growing. The regulatory landscape is becoming clearer. Institutional money is starting to flow. And Hedera's consistent focus on building real-world utility is positioning it perfectly to capitalize on these changes. The not sexy enough narrative might change as more and more major institutions announce their use of Hedera. The ETF delays won't last forever. The market's focus will eventually shift towards projects with real substance. And the stability provided by the Governing Council will become seen as a major advantage. You, as an HBAR holder, are in a unique position. You've done your research. You understand the potential. Don't let short-term price action shake your conviction in a project with such strong fundamentals and real-world promise. Understanding what might be holding the price back isn't about getting discouraged. It's about being informed. It's about having the knowledge to see the bigger picture and to make smart decisions for your future. Now, if you want to stay ahead of the curve and learn about the next potential catalysts for HBAR and the broader crypto market, make sure you watch this next video right here. In it, we dive into the latest Hedera Hashgraph news and analyze the key events that could trigger the next big move. Hit that like button if you found this analysis helpful. Subscribe for more in-depth crypto insights. And let me know in the comments, what do you think is really holding HBAR back? Thank you for watching. Stay informed, stay empowered, and I'll see you in the next video.